Good morning, everyone. It is they rebound from very, very important areas where buyers were actually stepping in during the FOMC. Now, we did get a pretty nice extended move to the upside. I'll talk about the S&P 500 futures, the NASDAQ, right? Some ideas, some breakdowns of how these distributions hold out and what's going on. And most importantly, today at 1 p.m. Eastern, what I'm going to be doing is going live on YouTube, breaking down, right, the understanding of how you could have found a move like yesterday, understanding how distribution theory works along with order flow in terms of depths of market and footprints as well. Looking at some real live examples, some live trading, seeing what we get into the afternoon session. Maybe there's more volatility like yesterday that could arise in some good opportunities. So it's going to be a fun interactive session if you guys come out to that, bring your questions and whatnot. But let's dive into some of the news that kind of transpired here pre-market and some of the news from yesterday in the overnight session. Generally speaking, what we had this morning was Q3 GDP, right, quarter over quarter, the third reading in the U.S., 4.9% versus 5.2% expected. Still, 4.9%, pretty large increase. Last reading was 5.2, so slightly lower, GDP was revised lower in Q2 to 2.1%, so slightly lower than expected from the 5.2, but still drastic increase all in all. We got a decent little upside move here in the markets leading back up into the tops of the distribution. We also had the U.S. initial jobless claims that came out, 205,000 versus 215,000 estimate. Prior weeks was 202,000, estimated at 220. So when we, excuse me, when we talk about some of the news that came out, one of the main things is tariffs and sanctions, right? The push towards protectionist trade policies is continuing in the U.S. all in all. Just under different branding and different administrations, America First and Make America Great Again have been replaced with de-risking and diversifying and leveling the playing field, but the results are often the same, built on platforms that seek to address national security concerns and the loss of manufacturing jobs or risks associated with supply chains. So billions of dollars in subsidies have even been doled out to various American sectors to encourage domestic products. Tariffs and quotas remain in place on many imports, and economic sanctions are increasingly being used as a tool to stabilize markets rather than deterrence. So there's a huge amount, there's a large list of reasons why things have gone that way, but one of the most important factors is that foreign advisories have been using the structure to weaponize the system, and in recent years the U.S. has passed mega spending bills like the Inflation Reduction Act, which poured billions of dollars into domestic energy production after watching Vladimir Putin turn off the taps in the EU. So the Chips and Science Act also offered generous tax credits and subsidies to shore up domestic semiconductor industries, while export controls have been put in place as Xi Jinping seeks advanced chip technology to promote the new world order. So this does continue to expand, with the U.S. imposing fresh sanctions on shippers and traders that have been helping the Kremlin get around fixed price caps on seaborne crude and refined oil products. Now, I've been talking about this for a very long time. I've been beating the oil horse to death, but I'm a firm believer that we're in a bottoming area in commodities, especially oil, that have the potential to see a nice risk on and continuation of the upside in the coming quarters. So, the move is meant to reduce reliance on Russian energy, and Deputy Treasury Secretary Wally Adeyemo noted that the measures would advance the goals of supporting stable energy markets. So fresh reports have also suggested that the Biden administration is considering raising tariffs on some Chinese goods, including electric vehicles, solar products, to protect America's green industry and limit reliance on Beijing in the clean energy supply chain. So that's some of the news that we got. I think that a lot of these beaten clean energy names are also to be put on the watch list, especially for 2024. I think there's a lot of opportunity there around what we just talked about, but it's going to be mainly on the watch list for me, along with energy and general commodities in the coming 2 years, I would say, for some of that upside all in all. So just keep that in mind as we go forth. We saw yesterday the S&P 500 was very, very close, right? The SPX was extremely close to a new all-time high. Futures actually tagged the new all-time high, believe it or not. The prior all-time high on a non-back adjusted futures contract is 48.08. So we did break through that into that 30 before dropping very, very aggressively, wiping out a multitude of gains, right? 70 points to the downside. Massive U-turn on Wednesday. And we closed, right, pretty poorly. In the overnight session, we came into a key area that allowed for a very aggressive pop coming into the morning session right now. So as it stands, right, let's take a look at these distributions because they're very important to understand. It's the basis of how volume actually moves price. And yesterday, what happened is we started running below the prior all-time highs at that 408.08, which was a massive support from the overnight that held really well into the current session, or yesterday's session, I should say. And we dropped very, very drastically under that and entered into a distribution to the downside under 47.92-ish, which is the top band, and the bottom band is 47.60-ish, low 60s. And then massive support where there was a massive amount of buyers that actually stepped in during the FOMC at 47.50, a very important level. It's very important to understand where those big buyers and big sellers come in because the market remembers, so should we as traders. Now, what had happened here pre-market is we've rallied actually back within the distribution. You can see here we've moved back within the distribution, suggesting that there's bullish momentum. Once we enter a distribution from the downside into the upside, what happens is that a lot of heavier buyers, strong-handed buyers actually get in aggressively to allow price to move through thicker areas of volume, suggesting that there is some kind of upside continuation. So as it stands right now, we tested the top band of the distribution. We're pulling back right now, some profit taking off of this rally. And I'm looking at that high 70, low 80 to continue the momentum move to the upside. Realistically, we are in the distribution right now, in a large distribution that played out several sessions last week. So balance, right? Probably the highest probability right now that we trade in that balance. But I would like to see if these bulls are serious about how they reacted from the overnight. Leading after a significant drop like this, there should be some kind of momentum that tries to push a little higher. So we want to clean up some of this auction from yesterday that would bring us back into that 48.08. So I'm leaning slightly bullish on some of these dips to see if buyers can indeed step in. Same thing here for NASDAQ. I've been trading NASDAQ a lot more recently because it has very good opportunities in my opinion. Very, very large swings, and yesterday had about a 260 point move on NASDAQ that we caught. And right now we're entering different distributions. What happened is, I was talking about this morning, if we enter outside of that 16,880 to 90, 880 to 890, above that you have that acceptance into this distribution higher where prices are imbalanced, where you tag the 30 and then the 60. It's going to be hard to get through the 60. So we failed at that 60 right now. It'd do really well to hold that 930-ish, but I'd probably be a buyer close to 880, 890 on NASDAQ if we can pull back, get some profit taking off this open, and hold some of that upside balance. So as far as equity markets go today, that's mainly what I'm looking at. I'd want to see if these buyers can continue the momentum move that they had from the overnight and dispel this kind of flash selling that had occurred yesterday, getting a lot of bears extremely excited about this, like, oh, this is it, we're going to drop into the new year another 20%. I don't think that's necessarily going to be the case, but remember, this afternoon, what we're going to be doing is jumping on live on YouTube, so come check that out, 1 p.m. Eastern time. So join us there where we discuss what had happened yesterday, what had happened on the morning session, and how we can read order flow and understand volume to a better degree to give us an edge in the markets. So with that being said, I'm going to open up our live trading room this morning in futures and see how we can go about this market and look for initial, right, pullbacks for the longs to hold prices out based on the current movement on volume that had transpired over the last 24 hours. So with that being said, check out TradeProAcademy.com and we'll open up our live trading room. Hope you all have a great morning. It's Thursday. We'll wrap up the week, the last full week tomorrow, and we'll go from there. So the U.S. GDP, right? It came out slightly lower than expected, but increased from last quarter. So there's some bullish momentum pricing into that, right? They expected a little more, but I still see it as a decently bullish reading. So we'll go through that. Let's open up our live trading room.